There's a group of inside investors and market makers that want to get you absolutely wrecked, and they are what's causing all of this panic and capitulation in the markets right before the next major move up, as the entire crypto market lost $286 billion on the first major move to the downside. And then, as of today, the market has lost another $215 billion for a total of almost $500 billion in total carnage and losses. And this has been their plan all along, as many people are starting to worry. Are we beginning to start to a new trend? Is the bear market beginning? And how long will it take for the market to recover? We saw $1.7 billion in liquidations on futures alone just the other day, and now we're seeing another 1.15 billion. It's extremely rare we see these types of liquidations on average days, which means these are rather large events. And that's because there's been a lot of leverage in the system. People get a little too greedy. People start to take a 5 to 10 to 20x long because they think, now finally we've bottomed out and the market's ready to turn around. And that's when these market makers smell opportunity and actually cause the market to panic by pressing a fat sell button with more money than you or I have, which is what causes all of these liquidations and causes the market to dump pretty hard. Now, when you combine that with some pretty big macroeconomic news events, things that are actually causing fear in the markets, the first one is the fact that Fannie Mae basically recently released a statement stating that prices must crash by 38% if you want an affordable home again, or incomes must rise by 60%, or mortgage rates must crash by 415 basis points. For any of these three things, something massive would have to happen to the economy, at which point I agree, which means we are at peak unaffordability in one of the largest markets in the world, and anything that happens in the housing market will have a ripple effect into all markets, as we witnessed back in 2008. And even at the end of the day, no amount of money printing or small rate cuts is going to fix this problem. This is a major problem for the entirety of the market. But I think the biggest event to cause fear in the market as of right now, aside from the fact that insiders are smelling opportunity at the cost of retail traders, is the fact that Secretary of War Pete Hegseth called a rare and urgent meeting of hundreds of generals and admirals. I heard it's upwards of 800 people, and no one knows what it is, but there's a lot of speculation that there's a major event about to unfold at a global level that's going to involve US military power, and that is not a good sign for markets because it's going to cause uncertainty. Any level of uncertainty, while we're already experiencing weakness in the crypto market, could cause for further carnage and losses. So I'll be covering these major events and pieces of news, as well as this article directly from the Wall Street Journal talking about Bitcoin's hottest new trade, which is perpetual futures, and which is actually through major market makers and insiders who don't care if the price goes up. They make money on the way up or down, are using perpetual futures to offer traders extreme leverage, which is making ripples and waves throughout the market, and it's what's causing actually this sell-off. And lastly, I'll be covering this article directly from Swift talking about transforming the experience for retail cross-border payments and what this means for Ripple and XRP. And finally, before we dive into all of the content, go ahead and check out altcoinpro.com. We now have about 990 members, reaching in on that 1,000 member mark, with the highest retention in the entire school community and platform, because we truly are worth our salt. And if you don't agree, go ahead and ask for a refund in 14 days. But we have courses, classes, live calls where you can ask all sorts of questions, altcoin picks. We teach you how to do technical analysis every single Tuesday with me, how to take advantage of DeFi yields so you can actually pay for this membership on the crypto you're already sitting on and holding, and the list goes on. But nearing into the end of the year, there are going to be a lot of opportunities, and we're going to cover them all right inside of of this platform. For example, one of our members actually took $10,000 of profits on hype when we called it in this group to take his wife on his 45th wedding anniversary. We called Aster before it popped off recently. Many of our members saw insane gains. We've taught people how to swing trade, and in this case, they take an XRP trade and earned 160% on that single move. And the list goes on. We had another member come in and thank us for telling them about Aster before it pumped. Not only that, but I really do teach you everything you need to know to be a pro on the charts. One of our students isn't able to make that live weekly call, but they actually watched the recording and they said they're learning a lot and thanked me so much for what we're doing over here. And truly the value is endless. So if you want to learn how to take advantage of any of these opportunities in crypto in one of the strongest, best communities on planet Earth with all the right tools, training, and resources, go ahead and check out altcoinpro.com. The link will be in the description where you can actually download an ebook and it'll take you directly to a page where you can check it out. You have nothing to lose and everything to gain. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. That said, the last few days in the crypto markets have been pretty nasty. And we're going to cover that because there are a group of insiders, whether they're talking, whether it's a conglomerate, nobody will ever really know, nor is it really your job to know. Your job is to simply prepare and properly perform risk management so you're actually going to take advantage of this next move in the crypto markets. Now, Bitcoin dumped pretty hard from that high of about 117,900 all the way down to 112 before seeing a slight rally up to 113, 114, and seeing another dump all the way back to $108,000, which was our prior range low. So as you can see here, we have a decent amount of support right here at 108 to 107. And if I were to drag this all the way back, you can see that that acted as a slight resistance in June and yet again in July, where we started to see support in this range before rallying to 123,000 for the very first time. Now that said, we're right back down into this range, and this is exactly what market makers want to occur because at the end of the day, they're accumulating in mass. If I go ahead and pull this exchange reserves up, you can see that the purple line has consistently been declining since going all the way back to May of 2025 when Bitcoin was at about $110,000, $111,000. More and more Bitcoin is leaving exchanges even on this dump. In other words, we're not seeing new deposits onto exchanges, which means truly you're probably entering some level of a bear market. What's causing all of these crashes and dumps recently is just a lot of leverage in the system. People borrowing against their crypto or against their dollars in order to buy more crypto than they could actually afford. That's what we call leverage. But from a spot perspective, you can see that there's been a tremendous decline in Bitcoin. So it's not deposits into exchanges. It's not spot Bitcoin and crypto that is being deposited. It's just leverage. And as you can see right here on these major dumps right here, we saw a stupid amount of liquidations on a 4-hour time frame. If I even come into that daily time frame, these are the largest liquidations we've seen in quite a while, but we had about $285 million liquidated just on Binance on the day. That's not across the board on all exchanges, and this is just against USDT. It also happened for US dollars. It also happened on virtually all exchanges. Then again, we saw another 266 million on this single day. So crash here, large liquidations, and as you can see here, now open interest is declining into these dumps, especially if I go into that 4-hour time frame. So seeing open interest decline is actually a healthy sign that we're truly seeing a flush in the system. And at the end of the day, the people that are actually making the majority of the money on these dumps, especially if you're just like a spot trader where you buy and hold crypto on any exchange, are not the ones holding crypto, but the ones using leverage and their unique deep insights into order books because they can pay to play with access and a stupid amount of capital are the ones that are shorting these markets and causing these dumps. But we have to pay attention to the overall long-term trend on spot markets and realize that we're still in an uptrend long term. So right now we are experiencing a bit of volatility. And again, that can come from a lot of different factors, not just insiders and market makers, although I do believe this is mostly a flush in the system and essentially a reset on anyone who is too levered to the hilt. Now, aside from leverage, I do understand that there is a bit of fear in the markets, especially when a report from Fannie Mae is basically stating that there is some systemic risk or that something needs to change in the housing market. That it would take a 38% drop in home prices or a 60% jump in household income just for affordability to go back to 2019 levels. This is a 6-year period. This is completely unsustainable. And in order to afford a median home in the United States now, it would require at least $113,000 per year. In other words, the majority of the youth cannot afford a home. So yes, it is unfair to compare Gen X or the boomer generations to the younger generations saying that they're lazy. Even if they're working as hard, it requires far more income in order to afford the same property. So this is making its rounds in terms of headlines, which could be a reason for some potential selling right now. But I like the way that this gentleman stated it best. He said, these are not solutions, they're systemic breaking points. In other words, if we do see a 38% crash in the housing market, which would be pretty insane and unheard of, that's a financial crisis replay. If we see a 60% income spike, that would likely not be great or likely to happen. This is probably the least likely to occur in all three of these scenarios unless we see hyperinflation. And finally, a 415 basis point rate cut would require the Fed to lose control of inflation and the bond markets. Someone even made a note of the fact that it's interesting that there's no mention of increasing supply. However, in all fairness, common sense would dictate that the majority of housing providers or builders would not go and build a ton more homes if no one can afford them at these interest rates. So imagine all of the costs and expenses associated with building a whole new supply of homes or property that literally no one can afford to buy. So of course, in this environment, there's not going to be that much of an increased supply, even if demand is high. But this is just one example of how the entire macroeconomic side of the market is in a pickle. Because as we stated the other day, Jerome Powell is likely to slow down on lowering interest rates relative to what we previously thought, which was a new rate cut every single meeting. Now he's saying we might not do it every meeting, it might be every other meeting or so. And so as incomes are obviously not spiking, something is going to have to give. And that includes the labor market, as unemployment has risen and we've been getting job revisions that are exceedingly lower than prior expected, which means not only are we not seeing an income spike, but there are less jobs to go around and more people are losing their jobs. When you see all these cracks in the market, that can create a bit of fear alongside this latest report that Pete Hegseth, the Secretary of the DoD or the Secretary of War, as they recently renamed it, ordered 800 senior military officials to a closed-door Quantico meeting. And a lot of people have been speculating something serious is going on and that all of them have to meet in October 1st for a session with no disclosed agenda. Now, this doesn't sound like a little meet and greet party. This sounds very serious, as the Pentagon spokesman Sean Parnell confirmed Hegseth will address the leaders but provide no details amid requirements. Think about this for a second. They're requiring commanders to travel from global regions, including the Middle East and Indo-Pacific. The gathering, described as unprecedented in scale, has raised concerns over logistical disruptions and security vulnerabilities from concentrating top officers in one location. The only reason you would do this type of a thing is if something serious was going down and they are preparing likely for war. And at this scale, it sounds like a global war. But in the coming days, I'm going to be covering it more, as right now, nobody has details. And I'm sure a lot of journalists are working extremely hard to figure out what's going on. But in my personal lifetime, I've never seen something something like this. And we've already lived through plenty of wars in the past. So it could be any one of those two events, but I'd probably put more weight into two things. The fact that we have a ton of leverage in the system, which I'll cover here in a second, and we already have a little bit, but it's also extremely likely that the markets are preparing for some really bad news into this October meeting between all of those high-ranking officials in the Department of Defense. Either way, I think these market makers smell opportunity because perps made up about 68% of Bitcoin trading volume in 2025. And this is in the derivatives market. So when we talk about $1.7 billion in liquidations, that's what we're referring to. And yes, a couple $1 billion can still move a major crypto market. Now, these instruments are derivatives, but unlike traditional contracts, lack expiration dates or so-called strike prices. So when we think of options, that's typically what we would experience. In the case of perpetual futures, they just roll over further and further out into time. And just so we have an idea of how popular leverage is and just how deep greed goes, Robinhood is a major player in the retail investor space and even mentioned that crypto and options trading drove almost 80% of the brokerage's transaction-based revenues in the second quarter. And so Robinhood is just giving us a glimpse into how crypto markets on virtually all exchanges that offer futures trading derivatives operate, which is why we see these types of liquidation events. So let's dive really quickly into the chart. And right now you can see that Bitcoin has dumped pretty heavily back down to $109,000. So when in doubt, I tend to zoom out. And you can see right now we're back down to some support levels, where not only did we see a resistance into the $107,000 to $109,000 range, but we also hung out below this range for a while before exploding to a new all-time high. So we saw a decent amount of resistance, which leads me to believe that Bitcoin is going to see a decent support here. And so if Bitcoin sees a strong support here, in the case of a situation where this is just a false alarm, October 1st rolls around and we don't see any major negative events at the Department of Defense or the Department of War as they now call it, then I actually think the bottom is in for the majority of cryptos. So zooming into now, let's say something like XRP, you can see on the 3-day time frame we're obviously lower or below our major support here. But if I zoom out to, or zoom in, to let's say that 4-hour time frame, you can see that consistently when we've been in this range of about 270 to 275, it acts as a support. And if the past is any indicator of the future, every single time we came back to the $195 or $2 range here, even though I was expecting some level of a breakdown, that never occurred. And instead, these were great dip buying opportunities before XRP rallied from $2 all the way through $3.66 for nearly a 100% gain. So that said, I still think we are in a macro bull market, especially with all of that Bitcoin leaving exchanges from a spot perspective. And buying a dip right here on XRP looks really good, especially when you compare a Ripple to something like Swift right now. Now, this is their latest article, which came out today. And in it, they're calling it Transform the Experience for Retail Cross-Border Payments, with one goal in mind: to make cross-border payments as fast and seamless as domestic ones. So we're talking international, global remittances, making them seamless, something that the blockchain can already do between all sorts of different banks and institutions, as long as you have a good intermediary that is compliant. But here's what makes the Ripple standard, or better yet, the XRPL, so good. Because in this article, they state that together with a coalition of over 30 early adopter banks, they're developing rules that will set a new standard for consumers and small businesses sending money internationally. And that they're trying to improve upon a system that's honestly lacking relative to that of the blockchain experience and world. Today, banks using Swift can already deliver payments that exceed G20 targets for speed, with 75% of Swift payments reaching destination banks within 10 minutes. Although that's really good when we compare it to, let's say, the old traditional financial world, and this would be revolutionary. At the end of the day, blockchain and the XRPL can far exceed 75% of payments reaching within seconds, 3 to 5 to be exact. And that's what we call time to finality. So with the technology like that, with the fact that we're still looking like we're in a bull market, and with the fact that a lot of crypto is leaving exchanges from a spot perspective, I truly think this was just a flush of leverage in the system, basically cleansing it all out before the next move up, which leads me to believe that dip buying this in a situation where XRPL truly solves a lot of the problems that Swift cannot, at least at this stage in the game, that right now is a good time to be buying. Now, that said, this is not financial advice. I'm personally accumulating, but I will say it is very much possible that we break below, let's say 267, 266. And in this range, anything that I bought right here from a swing trade perspective, I am going to be selling. And the reality is it's okay to sell there because I'd rather protect against downside risk in the case that something like this occurs, it breaks down a bit, I sell right here, then it pops right back up. And in this situation, I'd buy back in right here with a very small loss, knowing that now this was a true bear trap right here before the next leg up. But in the case that this does not occur and we don't break back out, and for whatever reason, this October 1st event with Pete Hegseth and those 800 generals turns into something far worse, then this would truly be a sign of weakness in the market. And if XRP saw resistance here and broke back down, I'd be very happy that I sold right here. So these are the two scenarios that I'm playing out. Accumulate right now, it breaks down further, I always sell right here at about 265 to 267. Then it either one of two things happen. It breaks back out and I buy back in a little bit higher. Totally fine. Again, I'm protecting against downside risk. I can always enter the market again. On the flip side, it breaks further down. Guess what? I'm really happy that I got out there. And the reality is everything looks good from a bull market perspective, but that can change in a moment. And so that's why I'm really cautious when I'm buying these dips. Anyways, that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also check out altcoinpro.com if you want access to any of these resources or guides when it comes to strategies, DeFi, earning yield, when to buy, when to sell, some ways to take advantage of indicators, heck, even going through my technical analysis essentials course, and the list goes on. Then go ahead and check out Altcoin Pro. You have nothing to lose and everything to gain, and arguably you'll be so much further ahead if you just get involved with our platform and community. Thanks so much for watching, and I will see you in the next one. Goodbye.